Hello and welcome everyone. Welcome back to another Gold Weekly Forecast. Today in this video, we will first cover the gold technical analysis on the 4-hour chart, where I'll explain the current trend, key support and resistance levels, and the exact conditions required for a trend reversal. After that, we'll deep dive into the fundamental drivers, including monetary policy, global risk sentiment, and key data to watch this week. So make sure you watch till the end. Let's start with the technicals. On the 4-hour time frame, gold is still trading in a short-term downtrend. According to Dow theory, a downtrend is defined by lower highs, lower lows, and that is exactly what we are seeing right now. After reaching the recent highs, institutions began heavy profit booking. This profit-taking, combined with year-end position adjustments, triggered a sharp sell-off from the top. That move shifted the short-term structure bearish. Since then, prices continued to print lower highs and lower lows, confirming that sellers are still in control on the 4-hour chart. Trend lines and price reaction. If you look closely at the chart, price is moving inside a well-defined descending structure, reacting cleanly to both the lower trendline support and the upper trendline resistance. Every time price touches the lower 4-hour trendline, buyers step in and we see a clear bounce. At the same time, every attempt to move higher toward the upper trendline results in a rejection and renewed selling pressure. This tells us the market is still respecting structure and is not trending randomly. Right now, price is sitting in the middle of this structure, which is why patience is critical. Bullish divergence, early reversal signal. Now, despite the downtrend, there is an important technical development. On the 4-hour chart, we have a clear bullish divergence. Price is still making lower lows, but momentum is no longer confirming those lows. This tells us that selling pressure is weakening and bears are losing strength. However, this is very important to understand. Bullish divergence is not a buy signal on its own. It is an early warning, not confirmation. It tells us to stop chasing shorts aggressively and start preparing for a possible reversal, but only after price confirms. Key reversal level, 4,400 zone. To properly trade this bullish divergence, we need confirmation. The most important level on the chart is the 4,400 zone. This level represents previous lower high, strong resistance, major psychological price level. If gold breaks and closes above 4,400, and more importantly, if we get a strong 4-hour candle close above this zone, then the downtrend will be invalidated. Once that happens, the previous lower high will be broken, structure will shift bullish, price will likely print a new higher high. We can then consider buy trades toward the upside. So 4,400 is the confirmation level for trend reversal. Until price closes above this level, buying remains risky. Downside risk, 4,260 and 4,200 levels. As long as the trend remains bearish, further selling pressure is still possible. The most important downside level is 4,260. If price breaks and closes below 4,260, that would confirm continuation of the bearish structure, and the next downside target becomes 4,200. The 4,200 zone is a strong psychological level, a previous demand area, a likely reaction zone for buyers. So from a technical standpoint, above 4,400, bullish reversal. Below 4,260, bearish continuation. 4,200, next downside objective. Current market conditions. Low volatility. Another key point to note is that today there are no major economic news releases. This means low volatility, slower price action, more range-bound behavior until Monday. Early January typically sees thin liquidity, so moves can be technical and sentiment-driven rather than news-driven. This makes waiting for confirmation even more important. Fundamental analysis, primary drivers. Now let's move into the fundamental side. Monetary policy. Economic growth remains moderate, but job gains have slowed. Unemployment has started to rise. This increases downside risks to employment, which is why the Federal Reserve recently cut interest rates by 25 basis points, even though inflation remains somewhat elevated. Policy is now fully data-dependent, meaning future decisions will depend on labor market data. Inflation trends. Financial conditions. Lower rates are generally supportive for gold, but the Fed is moving cautiously, which limits aggressive upside without confirmation from data. Global risk outlook. From a global perspective, bearish sentiment on the US dollar, strength in major and emerging market currencies, solid inflows into global equity funds. These factors support risk assets and reduce immediate safe haven demand for gold. At the same time, low trading volumes and thin liquidity early in January can suppress large directional moves. Price action may remain choppy and technical rather than driven by fear or crisis. There is also geopolitical uncertainty and war-related news, which adds headline risk. This makes risk management critical. COT report. The Commitment of Traders report is currently unavailable due to the U.S. shutdown, removing a key sentiment indicator. As a result, price action and structure become even more important for decision-making. The week ahead, key data. This week, markets will focus on ISM Manufacturing PMI, ISM Services PMI, ADP Employment, non-farm labor indicators, inflation expectations, housing data. Strong data would support the US dollar and pressure gold. Weak data could revive rate cut expectations and support gold higher. Final technical and fundamental summary. To summarize, gold is in a 4-hour downtrend. Structure shows lower highs and lower lows. Bullish divergence is present but not confirmed. 4,400 is key reversal level, needs 4H close. 4,260 is breakdown level. 4,200 is next downside target. Low volatility expected until Monday. Fundamentals are mixed with data dependency and global uncertainty. Trade with patience, confirmation, and proper risk management. If you want to learn technical and fundamental analysis properly and understand how professional traders read market structure and manage risk, you can message me directly on Twitter for one-to-one mentorship and training. If this gold market update helped you, make sure to like the video, subscribe to the channel, and comment below with your outlook for gold this week. Thanks for watching. Trade safe, and I'll see you in the next market.